Hello guys, glad to have you on board again. Today we start with the economic calendar. So we've had quite some news about the NZD during the night. So we'll have a look at AUDNZD cross. GBP is publishing as well, so we're going to have a look at this one too. We've got another set of releases in 6 minutes with Carney, Bank of England governor, who is going to be talking in 6 minutes. So I think that's the big catalyst for GBP today. We also can see that we have rate decisions on New Zealand as well during the night or later today, depending where you are, and that might be interesting to push NZD or to push AUDNZD towards the resistances. In the midday during the US session, we'll have a couple releases that might be interesting. I think durable good orders is today's big catalyst for the US dollar. We'll see about that because this one is relating to GDP, and I think right now the market is forecasting as its attention to that specific topic. No longer talking about inflation right now like we were in the early states of that year. It was all about inflation, and that what made the market fall apart back then. Right now we can clearly see that the problem is regarding GDP. We're worried that the GDP is going to be lower than expected, and if that's the case, means that the profits will not be there as well, as they've been priced very high, which means all the top market assets will be oversold because of this. I mean, if somehow growth have to be lower than expected, I think nasty things are down the road for all the big guys, the Fanget and the big assets, the Wall Street kings, basically. So we'll see about that. First, we take care of the Bitcoin as usual. Still doing nothing really interesting in here. We're in a daily chart time frame, as you can see, not the big of a deal. Yet we made a close below the previous day low, so today might be an interesting candle. It doesn't absolutely must not to be doing the same. It means if today, for some reason, is closing below yesterday low as well, without a lower shadow candle, that might be the worst case scenario about to trigger, meaning that we're unable to trigger some kind of trend, and at that point we'll have momentum consolidation and bearish outcome, which means probably bearish breakout of the supports in a row, and the market will probably accelerate once again inside that channel, which means we could have one more bearish pulse if for some reason we can't manage to make a bullish candle flushing out of this channel. So that's the two scenarios right now. Really impossible to make any kind of forecast out of this. It's really, to me, either we hold the support in here, manage to break up that resistance and get there to validate the bullish reaction of that market and exiting the trend channel. Option number two, we cannot do this. The trend channel is pushing us one more time to the downside. I think at that point we're going to have to break. As 5,800 was the last chance. I mean, that was the latest, the last possible support ever. I mean, if we're going lower than that, it's just breakdown supports we'll have, which means not necessarily any options to find support in there. So it's basically a falling apart market. So as I said, we have approximately $2,500 to go to the upside, $2,500 to go to the downside as well. So it's pretty hard to know what to choose right now. The market will pick a decision and we'll have to follow this. And so far, I'm really, just like I said, I have no clue. I've been trading the upside because I pick a side and now I stick to it, just not to change each and every day. But I wouldn't necessarily be surprised to be stopped out on that thing. So really, patience is still required on the Bitcoin. As for now, all I can see is that we try to install a bullish trend in here, and by bullish breakout and then bullish reactivation, we've totally invalidated it by bearish breaking out, confirmed by the bearish cycle, and this one as well got flushed out. So it's basically bulls try to get in, bears try to get in, both go some kind of wrong-footed. So all I can see to do right now, only rational decision will be to put a range kind of scenario in here. So as long long as you don't trade inside the dump zone, you should be fine. And as long as we remain above the blue area, we should be fine. And as long as we remain below the red area, we should be fine and just trading that range. So don't put a lot of effort in here. Absolutely no leverage possible in here as well. We're in ranges, which means you need to have broad stops and tiny leverage associated. Same thing goes for Ethereum and IOTA. I think this is pretty hard to forecast how this thing is going to play out. So it's just picking a side, wait for your time to come, and if it's the right one, then don't put too much leverage in here, but just rise the stop loss, eventually take a reinforcement, and then take your profits. I mean, you would have picked the right side. It's basically a 50-50 scenario. So the only thing that is going to make the difference between a good trader and a bad trader in that situation is that the good trader is the one who is going to manage risk-reward ratios, and the one who take a loss in the end, who is not managing it well, is risking more than what he could take, and that's the worst case scenario, and that makes it a very bad trader. Moving out of the cryptocurrency market, as I said, today is going to be a big day. I've got one more down day, and quite of a down day on the Hang Seng, who's been closing right at the low after opening at the high. So not the best case scenario once again in China. Things are really falling apart and suggesting we might eventually head to a bear market right there, which is not the best case scenario. Of course, Wall Street doesn't want to see that, because if China, which is let's set things straight. I mean, the world engine is not USA, it's China. I think that no matter how hard they try to make you think that they are the guys at play in Wall Street, they are not. I mean, without China, they're worth a shit. Everything they are selling, high pricing, is built in China. So if China is falling apart, the entire world is falling apart. So this stupid fight we have between Trump and China is just a smokescreen. I mean, if things are dirty, then let's set things straight. It's not gonna do well in the end. And what we have right here, bearish gap on a trend line, and then the market falling apart, it really is what I think, what we can forecast happening in Wall Street. So this is why I still have my bearish trades ongoing in there, no questions asked. I think at some point Wall Street is just going to fall apart, and it's not going to give you clues about the timing. I mean, at some point something is going to crack down, and the market will switch to panic mode. This is really how I see it. I mean, we've tried hard with the Hang Seng Index, same thing with Shanghai Composite. I mean, everything, they've been trying hard not to fall apart, and now it's happening. And we've got bearish momentum, bearish prices, and it feels like the market is unable to find support. And I think this is what we'll have in Wall Street sooner or later. It's just a matter of time, a matter of timing. But I think whenever the market is going to feel gravity in Wall Street, I mean, the gravity, I think, will be very devastating. So we'll see about that, see how it goes. Regarding the all correlated, I think we made a pullback in here with the VIX, which means we're probably ready to head toward 21 today and eventually higher than that. 21 is not necessarily going to be a resistance. I think it's just the point where the manipulations took place in the first time, which means this is a technical level no matter what, and we'll see how it goes. I strongly think the market is going to go higher than that afterwards, and it could very well go there in a single row and getting to 31 without questions. I wouldn't necessarily be surprised. All I'm saying is that I will watch how the market is going to react near that price. Because the bears, those who've been selling volatility, might try to hold the volatility just one more time and just push it backward before releasing it. So I wouldn't necessarily leave that, as we know that market has expirations when you trade the VIX contracts, which means I have to handle those expirations, and this is the only reason why I will take probably 50% profit and eventually more near that price area in here, just to take nice gains first of all, and secondly just to protect myself for eventually some pullbacks that could take place before we get to the contracts expirations. So just for technical reasons, let's set things straight, okay? Other problem, the gold. Absolutely abnormally pricing. We're on the late stage support. We finally got double taking profit pattern. What the hell? I want to see that thing going up right now. Otherwise, I really don't see what the hell is at play right now. It really is abnormal what we have in front of us. So now I want to see that market retracing up to the mid part of that trend channel, crossing it, and then exiting the channel to the upside to finally give us some room. I mean, I've been waiting for so long to get that market to terminate that shitty manipulation. And I think just as the VIX, we've got manipulation number 1 in here, manipulation number 2 in here, we've got a third one happening right now. And I think it's about time to let it go and get to reverse that trend to the upside. Otherwise, we'll have to break that support. And if we do, and that might be actually the goal of that manipulation, to flush out all the stop losses that might be there. So this is why I'm currently not that big of a confident regarding the gold. I mean, what I have in front of me is not necessarily good in terms of if we done all this, it means that this generally has a purpose. And manipulating the market is generally to reach out to a technical price first. And I see no reason just to go there. So we could just stop there, and if for some reason I got the validation, I won't hesitate a second to get into leverage position in here, because after a manipulated market, you know, I've been telling you about that. When you trade manipulated market, which is a context, just like the bubbles, crashes, trends, and ranges, manipulated market is like that. And the only way you can trade them is by being really patient, lower the stop losses, lower the leverage when you clearly see the speculation. And as you can see the tipping point where the manipulations haven't gone too far, this is the moment you start to get in with a little bit more confidence, and whenever you got the trade validation, you put leverage on those because the market is never going to retrace back afterwards. Okay, so I expect this thing to happen just as we done with the VIX, to see this thing kind of exploding, moving slowly at first, and then moving and taking and rising the pace in the meantime. Okay, on the ongoing scenarios to terminate with a very nasty exhaustion move in the end. So we'll see about that, but the only question I have right now is either the manipulation is going to stop there on that last chain supports, or the goal of those manipulation was to chase the stop loss down there. And if that's the case, I'll take one more stop loss on the gold, and the last one I'll trade will be near, let's say, 1,200, and let's say that price area. I think right here, this is where I get in with leverage, because the invalidation will be just below 1,200, which means very, very tiny stop, which means I could be able to take much more leverage than the trades I'm taking right now. So regarding the forex market, GBP is falling apart, and that's not normal, but this is how it is. I mean, James Carney is talking right now. It could be a failing market right now. So I've been buying yesterday, speculative, thinking that we will have an up move. What I see right now is the opposite. So I might be stopped out right now already. We'll see how it plays out, because when the central banker is talking, it could very well be noisy and be just a lower shadow candle or things like that. But I'm surprised not to see that thing going upward today. So doesn't necessarily know what the guy is saying right now, but the market is not taking it well. So we'll see about that. But right now, not a good thing. EURJPY is doing pretty well, no problem. We're getting once again on the support, just for the record, and that's today's trading tip. When you get there, you never make 4 times rebounds on the same trend line. It's generally 3rd time okay, 4th time is going through it. So it might be a rebound in the short term, but we're not probably not going to break resistances, get back there again and break it down. So I see the wave 2 probably validated in here, which means we might return to the trend on the 3rd wave that will probably break down and take down that support. So next stop to me on the EURJPY is near $124 yen per euro. Other things, so AUDNZD is doing pretty well. So as we saw, it's doing great. We just have to wait for tonight's market catalyst and see how it goes. And I expect it to manage breaking up that resistance. So I expect us to be there tomorrow, and I'd like to see that happening. So we'll see about that. The momentum's overbought, but we've got price and momentum bullish, so there's no reason for us to consider that a danger. So we still have plenty of room for that trend to keep on going on. So I think all the pullbacks will just be bought by the investors. Let me see if I've got anything else to tell you. Yes, I sold Netflix yesterday, back here at the right before the market close. I've been putting a stop loss right there because we've got a nice land reversal in here. So that's a pattern for those who don't know about this one. It's clearly when you reach out to a market top, it has to be a market top and historical highs, or at least it has to be yes, generally it happens on the historical highs. And this is where you got the market gapping up, trading in there for a couple days, and then gapping it down and closing at the low. So this is what we've been doing. I mean, closing at the high, gapping up, trading a range for 2 or 3 days, gapping down and closing at the low, not filling the gap. That's important. The gaps must not be filled with those patterns. And today, yesterday, we went just back to test that gap, which means as I saw we rejected it once again, I said, okay, it's very risky. I mean, this is why I haven't been sharing that trade to you guys, because I strongly think this one is going to be stopped out. But I've been taking it for a simple reason. Look at the risk-reward ratio. I'm risking 3.8% to get 37% return. It's a 1-to-10 ratio, which means if this trade is flushed out, no problem with that. I've been taking 1% risk on that trade, so it really not is going to be a game changer in here. I'm taking it knowing this is the highest level of risk, so please don't follow me there. Sorry about that. That's too risky for you guys to take, and there's not much of an educational content. I mean, taking the crashing waves, the first crashing wave is something that even the professionals are having hard times to do. So as if you are a beginner, don't focus on this. I mean, taking those kind of trades is not necessarily what you should put your attention on to. So I'm just saying this for transparency. So I've been taking Netflix yesterday, which means right now I have Netflix, Nvidia, Facebook, Apple, and Tesla in the portfolio, as well as General Electric, who's been doing pretty fucking great yesterday. Finally, I think the investors are seeing the potentials in that asset. And yesterday's session, even though it didn't manage to close at the high, and that's kind of a disappointment in the end to me, but as long as we have that gap, and I think that we shouldn't fill that gap, we should keep it. That's a sign of strength. So I would like to see that asset today performing again, not necessarily making a 10% day, but I would like to see at least a 1 to 2% day, and I absolutely need to make higher high than yesterday to show that the investors are buying this and forecasting the price to rapidly get there, which is the next resistance to me, and we're probably breaking it, which means going there pretty fast, working it out, the bearish volume for a couple of days, or for a couple of weeks, and then extracting upward to validate the double bottom structure, and we'll get straight ahead to 18, which will be a very nice gain to take. And of course I'm going to keep probably 25% of that position in the long run, because I expect that stock to go pretty much higher than that in the end. I mean, it's pretty much, I think, building the double bottom, validating in here, pull backing a bit, and then getting to that area, which I think is the equilibrium price for many reasons. I mean, if you're going to use the weekly chart, look at this. I mean, really, do you not see that technical area right there? It's 24, 25, let's say 22 to 26 is a very big cluster, and I think we have to get there at some point if we manage to find our bottom right here. So if that double bottom is validating, first target, and I think second target in a second time. This one is much longer run, which means we can take years. We can take at least a few months, and I think years to get there. So this is something you might want to hold for some time. So that being said, I think I've covered all I had to say today. So that's pretty much it. We'll see about that. Moving on to your questions. What happened? Deleted video? No, it's not supposed to be. Thank you for sharing your knowledge. Great. I'm doing it with pleasure. Once again, it's no problem. Do you see a red triangle already? Please a text update. Red triangle already on what? On the Bitcoin? Probably, but as I said, the Bitcoin probably is in a range mode, which means trading it right now is not necessarily the best choice. I mean, remember, trading the signals themselves is the worst mistake you could make, the biggest mistake you could make. So don't ever consider trading just the signals given by the indicators. You have to take care of steps 1 and 2. That's necessary, not to say absolutely necessary, to do before reading the signals themselves. Because the indicator will give you a lot of signals. They've been designed for this, to give a lot of patterns, but only those workers in technical clusters are reliable. Because I'm looking at price action in a very precise way, and the price action happening in outside of the cluster is not what you want to see. What you want to see is how the investors are trading inside the clusters. Okay. But this is impossible to program in some indicators to let them know where the technical cluster is. It's way too complex to make an algorithm understanding that this is the current price the market is interested in. This is a job that you're doing pretty better, a lot better than any indicator could do. And this is the only reason why, and we're going to talk about this at some point. I've been on Wednesday's shows, and by the way, we've got one tonight or today at 5 p.m. EST, and today I think we're going to talk about a different thing, but I offered you a choice to talk about algorithmic trading, and whenever you guys will pick that choice, I will tell you something about algorithmic trading, and fully algorithmic scenarios is nothing like that. Nothing like that is working. I've never seen someone making nice gains with automated strategies. That's not how it works. But how you can get better is having algorithmic assistance. It's what I call semi-automatic trading, which is what I do. You've got the algorithms helping you, but you have to help the algorithm as well, because you are better at doing some things, but the algorithm is also better at doing some things than you. So this is how it goes. I mean, you're taking the best out of two, best of algorithms and best of human, and this is where you get the best results. And to be clear, I've been working around this for years, so I know what I'm talking about. Okay. Anyway, I'm not going to spoil. We're going to talk about that when the time comes, when you'll pick that choice inside Discord polling. Anyway, again, gold in big bear market, according to Harry Dent, is calling for, yes, fuck him. They are just manipulating that market, and I think this is how it goes. So they do whatever they want. I'm going to tell you something pure and simple. Today, we've got heavy amounts of future sellers, but remember that selling is a buying promises. Okay, so you're making the promise of buying that thing later on, and today the issue is that we have so much promises to buy gold, but a gold that isn't existing in the real world. So at some point we're having great troubles today, is to figure out at some point the manipulation is going to go too far, because we've got too many people selling a gold that they won't be able to buy because there's not enough real gold in that world. So trading something that is not real, you know how it goes. It's not ending pretty, and I think the guys who are selling right now will probably get into trouble in the end, and we're certainly not going to $750. Absolutely not. I think this is going to crack down way before that, and I'm waiting for that tipping point to come. As I said, manipulated market requires patience, low leverage, but whenever you found the tipping point and you got the validation levels, fucking hell, put leverage. You're going to take some money out of this. Not the world, not the biggest leverage of your life, but I mean, in this case, trading with leverage is appropriate. Now, Phil, thank you for the great information. I watch your video every day. I have questions about the SPX. I noticed you'll look at different time frames, but I haven't seen you look at the monthly time frame. Is a reason why? Yes, there is a reason why, and I've been explaining that quite often, actually. It's the fact that whenever I trade, I don't want to get annoyed or let's say confused by other time frames, which means I look at the time frame I trade on, I look at the higher time frame only, which needs to be at least 8 times higher. This is a rule, so whenever you look at the 2-hour chart time frame to trade, daily is appropriate because you got more than 8 candles, more than 8 2-hour candles in a daily candle. Okay, more than 8 times the ratio in here. And that's it. I'm not having a look at anything else because anything else is going to confuse me. Having a look at higher time frame is not necessary. All I need is a context, not the big picture. I don't necessarily care about that. And having a look at lower time frames can be done in a single way, and you know about that. It's when you look for the signal, which means you already checked the context and you already checked the technical framework. And if you have one of the 2 indicators signaling inside the technical cluster, if you absolutely want to enter because you have a strong conviction, you can consider getting into the lower time frames. Same thing in here, at least 8 times the time frames, and find a double signal in the lower time frame. So it means that whenever you're trading, the best case scenario is having a look at 3 time frames: the one you trade on, the one that used as a context, and the one that can be used as an aggressive entry if you have strong conviction but missing a double signal in the area. But of course, if you do this, you lower the leverage. Okay, it means more aggressive trades. It means that the stop loss will be tighter, and that of course you put less leverage. That's how it is. But the monthly chart time frame, I'm not doing it. I will do it if I trade daily. Because in that case, for example, in the daily chart, I mean, 2 weeks would be appropriate, or yes, you can use the monthly in that case. But this is the only thing. I'm not trading daily, so I'm trading 2-hour. I'm using daily as a context. If you trade daily with signalings on daily, then eventually, yes, weekly can be a nice context for you in that case. But you have to see it that way. I mean, have a look at what is relevant to your trading. The rest just has to be flushed out. Otherwise, it's going to introduce doubts, and doubts is the worst enemy, is your worst enemy. Anyway, that's being said, we have cleared all the questions, so I'm going to leave you guys on that. I wish you a good trading day. Trade safe, be patient, and we'll see you tomorrow.